And now shifting focus to China. Global inflation pressures may be building once again, and data from China is adding to those concerns. China's export prices rose 5% in April from a year ago. That is the biggest increase since April 2023. The jump marks a sharp turnaround for the world's largest manufacturing hub. For nearly 3 years, Chinese export prices had been in contraction, and now that trend has reversed. The latest surge is being driven by rising global commodity prices and supply disruptions linked to the Iran war shock. Energy products recorded some of the strongest gains. Export prices for mineral fuels jumped 22% from a year earlier. Higher crude oil prices have played a major role in pushing costs upward. Fertilizer prices also increased sharply. They were up to 17% from a year ago, reflecting growing pressure on agricultural supply chains and input costs. Meanwhile, the technology sector is facing fresh challenges. Electronic export prices surged 21% amid severe global chip shortages. Tight semiconductor supplies are increasing production costs across industries from consumer electronics to automobiles. The rising Chinese export prices matters because China remains a key supplier to global markets. When export prices increase, businesses around the world often face higher import costs. Those costs eventually get passed on to consumers through higher prices for goods and services. The latest figures suggest that inflationary pressures are no longer limited to energy markets alone. Price pressures are spreading across multiple sectors, including manufacturing, agriculture, and technology. For central banks that have been hoping for any inflation surge to be transitory, the data could be a warning sign. As commodity prices rise and supply chains remain under strain, concerns are growing that global inflation could be rebounding. And if these trends continue, households and businesses worldwide may once again face the challenge of higher prices in the months ahead.